the best of Money Matters.
Market View on Money FM 89.3.
That's right, you're tuning in to Money FM 89.3. Time now for Market View with me, Chua Tian Tian, where we take you through how the Singapore stock market closed for the day, the biggest movers, sectors, and of course the companies to watch. But as always, a quick recap of some key movements. Well, Singapore shares dipped today, tracking movements in regional bourses. So if we look at the STI, it was down 0.45% at 3,877 points at about 2:46 p.m. Singapore time, with a value turnover of some 839 million Sing dollars seen in the broader market. Now let's take you through the closing numbers. The STI closed in the red as well, down 0.1% at 3,890 points. In terms of value turnover, we're looking at 1.28 billion Sing dollars. Gainers trailed losers 197 versus 297. Top advances for the day we've got for you Fuji Offset, Asus and DBS, and top decliners we have here GMX USD, Jardine Cycle and Carriage, and Combined Will. Now, in terms of companies to watch, we have Grand VentureTechnology, because the semiconductor company said yesterday that it had paused its proposed secondary listing on Malaysia's Bursa exchange in view of confidential talks with a third party in relation to a possible transaction, which could lead to an offer for its shares. Now, elsewhere, from a move by US President Donald Trump last Friday to double tariffs on steel and aluminium imports from 25% to 50%, to Samsung reportedly nearing this wide-ranging deal to invest in Perplexity AI. We've got more international and corporate headlines in focus. And joining me today is Chin Hui Leong, co-founder of The Smart Investor. Chin, welcome.
Hi, Tian Tian. Glad to be back.
Glad to have you on board with us as well. And Chin, let's start with the US this time around. Doesn't seem to be there doesn't seem to be a peaceful day, I suppose. Asian markets sank today because US President Donald Trump last week lobbed a fresh trade missile by doubling tariffs on steel and aluminium, and also accusing China of violating last month's agreement to slash tit-for-tat levies. Now, if we recall, Trump said on Friday that he would jack up steel and aluminium levies to 50% from 25%, which he said will even further secure the steel industry. What do you make of that, given how a trade court last week just blocked his Liberation Day tariff blitz?
Yeah, so Tian Tian, I was just observing the length of your question and your you saying at the start of the question that I think you may have subtly or implicitly answered the question already. But the truth of the matter is there are just so many ways to look at this decision, but I fear that none of them may matter in the end, right? Because on the one hand, you have this threat of tariffs, but on the other, there's this thing called the taco trade, or TACO. Trump always chickens out, and that's really riling the markets. People are sort of catching on that he may just back off from all these threats, 2 days later and so on, and that's really causing a lot of confusion and uncertainty, because on the one hand, you're talking about securing the U.S. Steel industry, right? But on the other, you're allowing, Nippon Steel from Japan to acquire U.S. steel. And on the one hand, you're talking about like securing, the U.S. steel industry again, right? But on the other, the U.S. steel production has been on a decline for decades, and I don't think just imposing one tariff or higher tariffs is going to solve the entire problem. I visited plants in Korea and India, or iron casting plants. It's not quite the same, but there are elements which are the same. But the key thing here to know is it's really capital intensive. There's huge machines, and I don't think anyone would want to just invest billions knowing that, a taco could be coming down the road 2 days later, right? But in the end, I think what people need to know is all this just screams uncertainty, right?
Yeah.
And I think that uncertainty ultimately is bad for business.
Okay. Now let's talk about immediate reaction for now, though, Chin. How far did Asian markets react to your expectations, given how China is closed for the Dragon Boat Festival today?
So I think the taco trade sort of might be catching on, because as I look through the different markets, the Nikkei, the Hang Seng, the Bursa, and so on, yes, they have fallen. But they appear to have just struck off the threat from Trump, because I do find that the declines are relatively tame, right? And for anyone out there, I really ask you whether if you just imagine yourself 1 month ahead from today, would you really remember what happened in today's stock market? Because I can't even remember what happened last month.
There's just so many changes, flip-flops as well, U-turns. But going back to the Singapore stock market as usual, Chin, since the segment runs daily, right? How did the STI fare today? Any surprises when it comes down to the biggest movers or the companies to watch?
Nothing but in particular jumps out for me. There were only 6 companies which recorded positive gains, namely SGX, DBS, UOB, UOL, Keppel, and Hong Kong Land. So these are all different industries, with the exception of DBS and UOB being in the banking sector. But do I see a pattern here? Not really.
Okay. Now, zooming in on some of the companies to watch, though, Chin, we have Grand VentureTechnology. Now, Grand VentureTechnology, when I checked at about 4 p.m., I think the stocks were up about over 10%. But what is happening here is that the semicon company said yesterday that it had paused its secondary listing on Bursa exchange in Malaysia in view of this confidential talks with a third party in relation to a possible transaction that could eventually lead to an offer for its shares. How significant is this of a move for the company?
Yeah, so I think that the fact that the company has paused its listing in Malaysia really sends a signal that it may have a privatization offer on the table. So I think that shares are just going up in anticipation of a good offer for the shares to be privatized. Now, at this point, I should sort of disclose that I own shares of Grand Venture.
Okay.
We're lucky to buy shares back in September when it was trading at 59 cents, and today it's more than 90 cents, right? But here's the thing, right? It's not that we knew that privatization was going to happen. It's just that we recognize that the business is recovering from a semiconductor downturn, and it would be a real shame, because if the shares were taken off the market and privatized, then you won't really get to participate in any of this recovery, 1 year down the road, 2 years down the road, and over the long term, which is how we like to look at shares on businesses.
Okay. Now, if you're just tuning in, we're in conversation with Chin Hui Leong, co-founder of The Smart Investor. Well, Chin, another counter to watch for today is DFI, because DFI said on Friday that it has divested 22.2% shares in Robinsons Retail for an undisclosed sum. So DFI became this significant minority shareholder in Robinsons Retail in 2018 through a share-for-share swap transaction involving Ruston Supercenters. Again, any thoughts on the latest move?
Yeah, so I've been following DFI for, I think, more than a decade now, and I think I'll be frank here. I think the writing was on the wall that DFI would eventually exit they call it the food sector, but it's really the supermarkets, the hypermarkets, and so on, right? So if you look back more than a decade and 2 CEOs ago, they really tried their best to turn around the business. But I think that once you get into the weeds, you realize that a lot of basics were missing, right? There's no fresh produce strategy. There's no house brand strategy. There isn't even a unified ERP or a warehouse or cold warehouse where they can store, vegetables for fresh produce. So there was a lot of basics lacking. And then the ball got rolling when the previous CEO started exiting the hypermarket segment back in 2023. That was in Malaysia when they stole all their giant hypermarkets. But the big one to me was what happened late last year, which was them selling Yonghui, the Chinese fresh produce supermarket. And this was big for me because this was supposed to be your fresh produce strategy, right? And you're selling it away. So there was effectively no more strategy, which tells me that all this is just steps they're taking to eventually exit the food segment.
Okay, so nothing surprising, so to speak, on this end. But across the region, Chin, let's talk about AI, because Samsung Electronics is reportedly nearing a wide-ranging deal to invest in Perplexity AI and to put such technology from Perplexity AI at the forefront of its devices. Now, basically, the broad tie-up may help Samsung reduce its reliance on Alphabet's Google and pave the way for it to work with a mix of AI developers, similar to what Apple's strategy for its devices and services is. What do you think of the potential partnership? And eventually, what do you think this would mean for the competitiveness of Samsung and the AI space?
To put a long story short, it's still very early in the AI search space, right? To give you some perspective, the last figure I got for Perplexity was they have roughly about 100 million visits weekly, right? This is not just visits, the queries or the search queries, they're getting 100 million weekly, which sounds like a lot until you find out that Google is doing something like 100 billion weekly, right? So when you compare the scale between Perplexity and Google, it's just not comparable at this point of time, right? Of course, I expect that Perplexity would have improved since October last year, but even then, even if they double, it will still be small in relation to what Google is handling right now. Secondly, I think that overall search is evolving. Google has search overviews, which is being used by 1.5 billion people monthly. And even something like Google Lens, which allows you to sort of take photos and search based on that photo, that's 5 billion monthly right now. So there is, to me, a lot of questions also for AI search where monetization, to me, is still a very big open question. With this sort of scale Perplexity have now, there's no way they can provide the same revenue that Google provides to Samsung right now. And there's also the question of hallucination. How much is this a problem in the future?
Yeah, and finally, before we let you go, Chin, we've got an interest rate decision due from the European Central Bank, ECB. That is on Thursday, I believe. And out of the US, we've got the latest April job openings report due tomorrow, and the US non-farm payrolls for May due end of the week. And not to mention that slew of manufacturing indicators out of Asia as well. A lot of things going on as usual. How would you prioritize what to watch this week?
Yeah, I think I said from the start, I fear that none of this may matter in the end.
Because we're chasing after indicators every month.
Right. And a lot of it is just backward looking, right?
Yeah.
I mean, companies have reported their Q1, but, none of this really does matter because Liberation was on 2nd of April, which is after Q1, right? So we did get a bit of hint from the businesses which I follow of what could happen for the rest of the year. But, I think Q2 is when reality really bites and really comes in and we see the real impact of all this uncertainty and so on. So I don't know if any of the measures matter as much at the moment because of how unruly the president has been, changing his mind on tariffs and so on. And I do not know how much all this uncertainty will eventually translate to, economic slowdown or anything of that consequence.
Okay, I suppose lots to watch as usual. Thanks so much for the insights, Chin. That was Chin Hui Leong, co-founder of The Smart Investor. Thank you so much for joining us on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.